So 2022 is almost over, guys. Just like that, we have a couple more weeks here in November and December, the holiday time period, which is going to be really fun. I'm super pumped about that. And then it's going to be 2023. Just like that, it's going to be 2023. And let me ask you this. Has the economy gotten any better? Has the inflation problem gotten any better? Has the stock market gotten any better? Of course not. It has not gotten better. And overall, I feel like it's not going to get better anytime soon. Well, I don't want to be a doomsdayer, fear-mongerer, because that's not the point of this video or this channel, but I don't think, let's just put it this way, I think it's going to get worse before it gets better. And for us long-term investors that want to buy and hold for the long term, this opens up an opportunity for us. Hence why I'm making this video here, which is going to go over, we're going to talk about what I'm buying in the 2023 recession, stock market crash, whatever you want to call it. Because again, I feel like things are going to get worse before they get better. So without further ado, sit back, relax, take a sip of your coffee, guys, and let's dive into the video and talk about the basics first. I know, the basics, the boring stuff. Index funds. I'm going to buy VOO right off the bat. Let's just put that out there. I'm going to be dollar cost averaging into the S&P 500. That's just plain and simple what I'm going to be doing. Well, not the only thing I'm going to be doing, but one of the things I'm going to be doing to build the base, the foundation of my portfolio, which is the S&P 500. So that's right off the bat, number one, right? And if I pull up this Yahoo Finance page very quickly, guys, stay with me, and we'll go over a bunch of ETFs and just stocks in general, so make sure you stick on throughout the video. This right here is VBR. We'll talk about that in a second, but VOO, going back to what I just said, this is the S&P 500 ETF, right? You guys know that year-to-date down 20%. The yield is about 1.8, so that's the dividend yield. P ratio 13. I'm not even looking at that. I don't really care. I'm just going to be dollar cost averaging into it and reinvesting all of the dividends. So that's number one. Number two, which you just saw on the screen, is VBR. This is the Vanguard Small Cap Value Index Fund. And I actually don't own any small cap anymore, period, let alone small cap value. I used to own IJR. Bought this a couple years ago and gradually sold out of it. I made a good amount of money on this. I remember I sold it over $100. Now it's at $95. This was, again, a small cap ETF that I owned. But now I'm kind of on the Vanguard bandwagon. And no, this is not sponsored by Vanguard, guys. I just like Vanguard funds. They're just, simple, low cost, which is the best. Look at the expense ratio on this. And on VOO, the expense ratio is 0.03%. VBR, it is 0.07%, meaning for every $10,000 invested, you are going to pay $7 to the management, or for the fee, right? Essentially to own the ETF, which is nothing. Trust me, that is nothing. And this, believe it or not, and if I go back here to ThinkOrSwim, you'll see VBR is only down 9% year to date. And again, this is the Vanguard Small Cap Value Index. That is actually very low. Let me show you this right here. Again, this is VOO, but we'll pull up VBR. Take a look at this, guys. These, and in general, the small caps are not doing that bad. Well, the Russell's a bit different. But look at this. VBR is down only 14% from all-time highs, which were hit about a year and a half ago, which is pretty impressive. Another one that I'm looking at is, I think VB wasn't a value. It was just a small cap growth ETF, or just a regular small cap ETF. This one's down 23%. So believe it or not, I know it's crazy, but small caps VB right here is actually doing better than VOO. Let me double check that. Actually, no, it's right in line with VOO, but small cap value is doing better than VOO in the sense that it hasn't come down nearly as much as VOO has throughout this bear market, which is very, very impressive. And that's not the reason why I'm buying it in 2023 during the crash recession, but it brings comfort to see that. Let's put it that way. And I do want to get a little bit more exposure, diversification into small caps here. And another thing that you could do if you don't want to focus on or worry about, how much large cap exposure do I have, mid cap, small cap, you could just buy VTI, which is the Vanguard Total Stock Market Fund, which essentially has large caps, mid caps, and small caps all in one, right, for U.S. Stocks. So if you want everything in the U.S., total stock market, VTI would be the way to go for you, and that is one that I personally don't own right now, but for sure there's no reason why you shouldn't own it, or there's no reason why it's bad, right? It's really personal preference. Do you want to have everything in one ETF, or do you want to kind of have a blend of different ETFs in your portfolio, if that makes any sense? Because again, VTI is large, mid, and small all in one for US, and if you want to have a little bit more, you want to blend it yourself a little bit, you want to have a little bit more large cap, some international, and maybe you don't want small cap, you could kind of create your own if you blend different ETFs, and that's kind of what I do, right? I own VOO. Another one that I own is VOT. Let's pull that up and talk a little bit about it. This is the Mid-Cap Growth Index Fund. This has an expense ratio of 0.07%. It's down 30% year to date, so keep in mind that is down a good amount. The yield is about 0.8%, so this is not a small cap ETF. Again, it's a mid-cap growth. So I personally have my top 3 ETFs right now, I'd say, are for sure VOO, VXUS, which we'll talk about here in a second, and this one right here, which is VOT. I just put money into these pretty much every couple weeks, for sure. It depends. VOO every week usually. VOT probably at least once a month. I'm buying some VOT. VXUS at least once a month. I'm buying that, or sometimes twice a month, depending on how things are looking. And VXUS, again, this is one that I own for international exposure, right? And this is pretty nice. It pays a nice yield, 4.2%, and you can see it's down 21% year to date. Expense ratio is 0.07%. So not to bore you too much with these ETFs, guys, but those are the ones that I own. I don't own all of those. Again, the small cap value one I'm looking to buy in 2023, and all of these I'm looking to buy more of in 2023. And these are pretty much, in general, the ones that I'm looking at. So if we're looking at individual stocks now, there's a couple here that I'm looking at, and the first one that should not surprise you, and these are all pretty much big tech names for the most part, not all of them, but we have, for the most part, big tech names. Google is one that I'm very interested in adding more, especially here at the end of 22, heading into the year 2023. We're now in the low 80s. The market cap for Google, if I pull it up here on my iPad, guys, give me a second. Last I checked, it was under $1 trillion. Where is it now? Let me double check, guys. 900 something. No, now it's 1.1 trillion. PE trailing 12 month is 17, so it's not like a bargain basement value yet. But if Google starts getting down to the 70s, yeah, now it's starting to get to a point where it's very, very attractive. So Google, for sure, I'm going to be buying in this new year, for sure. There's no doubt about it. Companies like Disney I'm looking to buy more of, which I actually haven't bought in a while because, to be honest, it's just been holding in the low mid-90s, and I already bought probably 2-3 times, maybe just twice, in this range, 90-95 over the past couple of months. So now for me to buy more to dollar cost average even further down on this, we're going to need to get it under 90. At least that's how I'm looking at it. 80, 85. That's where I'd be wanting to buy more Disney here. NVIDIA is one that you guys, I actually didn't tell you here on YouTube yet, but all my Patreon members, again, you get all my real-time alerts on there, morning videos, call-outs, more access to me if you want to check the Patreon out. Shameless plug, link down below. I actually sold out of my NVIDIA. Funny enough, I bought it a couple weeks ago at 121, sold it after the bell on Friday at about 141. So I made, I think, 16-ish% there. Very solid short-term gain. And I was trying to actually build that out to a big long-term position, but it just ran away too much on me. And I figured we're in a bear market. This is a little gamble on my part, a little speculation, but I have a feeling NVIDIA could come back to the low hundreds, and I'll be able to get back into it maybe at a lower price, maybe under $121 a share where I was in a couple weeks ago, and again, I just sold out of it. That's the speculation I'm taking here, and we'll see if it ends up paying out, playing out here in the short term, because look at this, clear as day. We have a downtrend. We're not yet out of it. We're not breaking out, and I'm scared. I'm not scared, but I was skeptical. That's a good word. That this rally is. I'm pretty sure. I was thinking. I'm like, this has got to be a bull trap, right? And that's kind of what I'm still thinking here. And that's why I ended up selling out of my NVIDIA and treating it as a short term capital gain, and we'll see. Maybe we get a re-entry. Hopefully we do, which is why I'm mentioning it here in this video in 2023, even at the end of 2022 here. So Adobe's another one which now it's finally starting to crater again. Last week it got up to 330. It just got too hot. It went from 275 to about 330, which in a couple of weeks, that was a move of about, $50 roughly. But percentage-wise, we're talking 20%, and now we're back to 285. We're down 15% in just a couple of weeks. So funny how that works, right, guys? Look at that. Not NVIDIA. Adobe took a couple of weeks to get 20%. It took 30 days to gain 20%, and then it just took 7 days to lose 15%. What's that saying? Stocks take the stairs up, elevator down, or some crap like that. I forget. But overall, that's a perfect example of exactly that. And Adobe is one that I would love to buy and own and build a position, which I feel like we're getting there, under 250 or around 250. I mentioned this on my channel a few weeks ago that I actually bought some in my fiance's account, a little bit of Adobe, but I didn't buy any in my account yet, my personal account. And for me to do that, 250, 275, not 275, more like 250, 260, that's where I'm looking at it. So for individual stocks, kind of like, I don't want to say boring, more blue chip tech stocks, because they're not boring, but more, I guess, blue chip tech stocks, those are the ones I'm mainly focusing on. Adobe, NVIDIA, Google. I guess Disney's not really a tech stock, but I'm looking at that one as well. Enphase is one that I'm also trying to dig deeper into. I don't like the valuation on it at these levels, but this company is growing very aggressively, and this is one that I might consider as more of a risky play, higher growth play, because a lot of the stocks I've been buying, guys, for the long term, sure, they grow. They're profitable companies, they grow, but they're not the most risky bets, I guess you can say. A lot of these are more safer, at least in my opinion, safer plays. Google, Alphabet, S&P 500, the Vanguard International Fund. These are all safer, longer-term plays. I want to throw some spice in the portfolio. I do have some more speculative stocks, but it's been a while. That's the thing. It's been a while since I've added one of the portfolios, what I'm trying to get at. So maybe if it gets to a point where it's, looking a little bit cheaper, it's pretty much 2.5x in the past couple of months. If it comes down a little bit, I might consider adding Enphase. We shall see. I might have to do a deeper dive video on it, and I'd love to know your thoughts on that in the comments. So with that being said, guys, I'm going to wrap the video up. If you enjoyed it, hit that like button. Make sure to subscribe. And if you haven't gotten your $10 plus up to 15 stocks for Moo yet, use that link down below. Deposit at least $100. And again, you get $10 free plus up to 15 stocks, each up to $2,000. And you can also man, I'm not editing this video. This is bad. You could also get 12 stocks from Webull with any amount deposited. All of those are linked down below. And don't forget to check out my Patreon. And with that being said, guys, I feel like an idiot. I'll see you in the next video. Peace out.